Once we have a coverage document or a medical policy document that says that your service or device or drug is not investigational, you still need to find a way to get paid. I guess you knew that. But you didn't know it was as complicated as it is. The first thing is you need to have a CPT, Common Procedural Terminology, service code so that you can actually put something on the claim. And these service codes are issued by the American Medical Association. And there's a whole process. They work very closely with CMS on this to get a code. But even that can be a problem. So let's say that you have created a new type of electronic defibrillator, and there's already a code for electronic defibrillator. If there's already a code, that means we've already established a price for it. And so if your electronic defibrillator is only economically feasible at a higher price, then you're basically plugging into a code that's paid at a low rate. Because the question is, how do you determine the price of the codes? Well, most of the codes that we have, the federal government has established a value unit for it. And we just take that and use our standard conversion factors. We do not have a lot of people who can figure out what is the right price for these things. So we look at benchmarks, basically, but we basically look external to ourselves. And if you have a CPT code, we will do our best to price it. Often, your devices, however, fall into a payment model that is global. So how many of you have heard of DRGs, Diagnostic Related Groups? Okay, that's how hospitals get paid. So a hospital will have a hospitalization that they're billing us for, and that hospitalization will be for hip replacement. The hip replacement required a device that one of you in the room invented and then went through this unbelievable process, got it approved. Now the surgeons are using it, and we get a global bill for hip replacement. It turns out that we're not making a separate decision on the technology used in the hip. We're just paying for the hospitalization. That means that your customer, in terms of a payment model, is actually the hospital. Because let's say that we pay that hospital $25,000 for the admission, and you've got this really incredible hip that you've invented that will guarantee that you'll break 80 on the golf course, even if you couldn't golf before. If you're pricing it at $25,000, then the hospital is not going to be prone to use your device, because all of their payment for that hip replacement admission gets used up by the payment for the device. So they actually are going to be fairly cost conscious unless your device has become so popular through the media that nobody wants to go to a hospital that is failing to use your device, in which case they will come back to us and say $25,000 for a hip replacement admission just doesn't cut it. We need to negotiate a higher price because the technology is there. And lots of times, these new devices or diagnostic tests are linked with other forms of payment. So the payment model can be a difficult thing. So you've got the coverage agreement, the medical policy, which is saying that it's not investigational, so at least it can be covered, and then you have the payment process.